Coming up in this show, I'm going to bring you my opening comments on the markets. Ari has a sample for you of the Future Speak show. He's going to bring you a great cycle analysis lesson on the US dollar Canadian. And now you will finally see our day trading service with the Impulse Monitor. It is available. And I'll show you my analysis on the semiconductors in sync with the bottom of the stock market. And our cycle analysis workshop special is available. You can save $400 and get a $400 bonus. And then I'll bring you my analysis of the stock market. I'll show you the S&P 500 with some of our proprietary indicators. The timing has been just amazing.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week show. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market surged upward last week as investors looked at a 10% correction as a spot to find bargains. There was plenty of bad news, but investors jumped on board seeing nothing was going to send stocks lower. It was amazing timing for us, a bullseye on the correction on our analysis in both time and price, and I'll show you how I did that later on in the show. And of course, you'll have an opportunity to invest in our cycle analysis workshop. Wednesday and Thursday especially, we saw good gains in the market as ADP and ISM both were very weak and wage growth softened again. But big news came out of the FOMC as they held rates. Well, that is probably not big news because that was expected. But they did imply that even though the economy was strong and that a rate hike was still on the table, that they really saw that the overall conditions were such that there was not a lot more to go on the upside in rates. Powell sounded very, very dovish. And when he was asked the question why long-term rates have been going up, he said, well, it's not because of us. Well, exactly what has been pushing up? Of course, we know that it's the demand from the government that has been pushing up interest rates, and he missed the opportunity to blame the government on the insane spending that they have right now. But still, he did everything he could to be calm, as he does do, and that pushed the bond market up very significantly. Bonds have had a 3-day rally that was just absolutely explosive as interest rates have fallen very sharply. Qualcomm had good earnings, and that helped move the market up also, and that gave an indication that maybe the handset slump was over. But Apple, which was up a couple percent on that news, then fell pretty sharply on their own news that, well, handsets may be strong, but they were finding softness in China and in other aspects of their business, and they downgraded the coming quarter, so that was really bad for the stock market, which fell for a few minutes, it seemed, overnight, as those Apple earnings scared investors, but that didn't really matter much as buyers just refused to let the market go down. And then when the payroll numbers came out softer than expected, the market then just took off again. Payrolls up 150,000 versus 180,000 expected. Unemployment rate a little softer at 3.9%. And the bulls liked it, and the bond market loved it as it surged to the upside again. Yields have fallen very, very sharply this week, and the S&P 500, which was down just a measly 10 points or so overnight, surged then to up about close to 40 points. And now here at midday have given a little bit of that back, but not much, as the market still looks really strong. So the stock market is now surging to the upside. As investors are acting as if they're certain the Fed is done with this hiking cycle. Well, I'm pretty sure of that also. And I want to show you why as we look at a couple of charts here on the 10-year yields. This is the 10-year yield weekly chart. And what we're looking at here, of course, is cycle analysis. And those of you that are brand new to it, you can see what is on the bottom, which we call cycle brackets, which gives us the timing, the rhythms in the market. And what we're seeing in here is a very likely cycle peak. This particular rising phase that you see right in here really looks like it ended. And it came down to the support level right now. But there are indications on the daily chart, and I'll show you that in a second, that this is a very important peak. You could see this blue area where it got up into the projection area that we had put in here, and getting up to about 5% on yields, then dropping off very sharply to about 4.54%, where it is at the time of this recording. And you can see in here that our projection right now is down to about 4.24%. That is a key 78.6%. Now, what I want to look at here is the daily chart, and that's right here. And this is very important. Part of cycle analysis and understanding this method is what happens when it gets under key cyclical low levels. That's where we are right over here. And if you look at the timing of this peak, which is on the left side, this is called a left-hand translation. This was an engulfing pattern that made that peak on the candlestick. And now you could see momentum, that little arrow right over there, and down over here on the slim ribbon PO telling you that all of this upside momentum, which we have seen, is now gone. And breaking under this level says to us that while rates could pop up a little bit right over here, they are very likely to fall out into this period into the early part of December. This overall is a bearish look for interest rates, a bullish look for bonds, and then even this next rally over here is very likely to fail and set up a buying opportunity in the treasuries again while yields get a little bit of a pop. So that is a look of a very negative condition when you look here at this, at the weekly right over here, which has a peak, the daily over here, which is signaling something pretty negative for the stock market. And that says to us that the yield peak is likely in place. And what that means, most likely, based on our analysis, is that the stock market bottom is in place. And this is very likely a resumption of the cyclical bull market. We looked for the correction. We got it in the timing we expected. And now the low really looks like it's in place in stocks. But chasing this market in the upside after a monstrous 6% gain, well, that might not be the best approach. With all these geopolitical risks that are out there and very high economic risks, which we see a slowing economy and earnings, which are definitely showing weak prospects, and we expect to see a lot of negative guidance coming out for stocks over these months, well, that probably means that there is a lot of chop ahead in the market. You really need to pick your spots, and I'm going to show you more about that a little bit later in the show. Stocks for the week, well, the major indexes had their best week in a year or more, up about 5.5% to 6.5%. The Russell was actually the biggest gainer. It was one of the weakest sectors, and that's because interest rates are coming down sharply, and those companies borrow a lot of money, so they're chasing up these beaten up zombie stocks. So they were the best performers, but still 6% or so average gains is really huge. Bond market 30s gain about 4.25 points. The 10-year yields fall 28 basis points, and I just showed you those charts. Gold market, which got way ahead of this drop in interest rates, loses about $15 on the week, but the dollar now is turning weaker, and we could see the gold market doing much better. Silver about unchanged on the week. And the copper market, which is very important, we were looking for a bottom, and now that looks like it formed. If you want to get all of this information on our futures analysis, do watch the Futures Speak show, and RV has a sample of that coming up in just a few minutes. The dollar loses about 1%. It comes mostly here on Friday, and I think the peak is in on the dollar, and we're bullish and have been bullish on the euro and the pound, and I think the yen is going to catch on to that pretty soon. Oil market, it falls about $3. And we're bearish in there. And the only thing that could really change that would be if something like the war expanded in the Middle East and Iran blocked the Straits of Hormuz or something ridiculous like that, because that would bring a very, very strong reaction from the United States. So the market might get a pop in here, but I think there's a sell opportunity coming in about a week in the oil market, which I think will give you a very nice opportunity to get on the short side as it gets a pop. So oil market really looking like it is turning weak, and we talked about that for the last few weeks. That is the opening. I want you to go to askSlim.com, subscribe to our new SIR Lite. This is a look at the stock market every day for free. If you're not a member already, you can go to YouTube and subscribe to the channel. Click the notification bell, because that's going to let you know when we post videos. And do like this video. Give it a thumbs up on X. Follow me at askSlim. Any questions you have on anything presented in this video about our memberships, education, analysis, you can write to Matt at askSlim.com. This is a sample of FutureSpeak. Arvie's going to share analysis on the U.S. dollar Canadian, and this is really a great cycle analysis lesson, give you a really good taste of what we do on a daily basis, all four of our analysts here at askSlim.
Let's go ahead and shift over to an interesting pattern. That's the USD CAD. And this is just acting beautifully still on the upside. Now, very important to not lose sight of the daily cycle translations and understand how that's influencing the weekly. This is a very important chart to really show that to you. And let me just zoom out here. You can see that we formed our low right here on 710. And in terms of just these minor cycle translations, they are clearly positive. This is a right-hand translation where it had a short window of time for a pullback. That's this pullback right there. Highest probabilities would be that it would look back at old highs at 136.94, and it did. Okay, and now we have to follow what's going on this dominant translation. This is also a right-hand translation. So it says once we're through with this, what is likely just a minor pullback, we'll be still looking for higher prices here in the USD CAD with a low that is due 1113.211. Now, right at the start of this symbol, I talked about the importance of not losing sight of those daily cycle translations. Just because we get late in an intermediate term cycle does not mean that it is time to bail on longs. You have to really see, if you're a short-term trader, clear breakdowns in that short-term trend. Did we see that? No, we didn't, right? We formed our low right here. We formed what is a bullish translation right there. And off of this low, what information do we have to work with? We had a daily low that was due 1018 to 1030. We had a positive cycle with a higher cycle high and a higher cycle low. Highest probabilities would be at least a retest of the old highs at 137.84. We got that, right? And are we seeing any obvious signs of that risk on the intermediate term chart showing up on the daily? No, we're not. We still have a firm uptrend in place. We haven't had any clear violations in terms of our key cycle lows, which are currently at 136.60, and then this old low is at 133.76. So the short-term bias is positive. What do we have on the upside? Now we have a 61.8 at 139.06, then a 78.6 to the 100, 139.76 to 140.69. Those are still in play clearly. And what are we looking for in terms of some signs of weakening? We would need to see a shift to neutral from what is still a bull uptrend, and we have to see a breakdown versus 136.60 to give us some signs that we are entering into a peaking phase on the intermediate term in the USD CAD. So this is a very important chart and just emphasizes to follow trends and follow the cycle structures. It'll keep you in the moves for longer, and that's really what is so key, is to be able to stay in trends when they are happening and not get overly focused on just where we are in that weekly cycle. When you're in a really strong right-hand translation, there's really a lot of money to be made on the upside, and it's important not to get shaken out just because you're getting late on an intermediate term cycle. Follow the shorter term translations and follow that trend in order to stay in those really strong moves. So that is something that is an important takeaway from that symbol.
Super work. Just a great lesson on that, RV. Now available for active traders. This is the new askSlim Day Trader service. This is fantastic. What you're going to get in our Day Trader service is our new impulse monitor that you could see an example of right over here, and I'll show you that live in 1 second. Wow, what just happened? Let me just get my pointer out over here. That was wild. This is the impulse monitor. What that shows you are the conditions, and it says live all of the time with our algorithms in there, checking the market out constantly for intraday traders. And telling you what the conditions are. This is not live, and I'll show you the live one in a moment. And you get our SIR intraday grid, which shows you 15-minute charts with fantastic information in there. I'll talk more about that also in just a second. This is what it looks like on our mobile, several mobile views that you have that you can put up. And yes, you can now get for the first month $24.50. That's all. It's a 30% discount if you sign up for the first month and really check us out. You'll love that. This app shows you when it's the highest odds of a strong intraday directional move, or when you may get a resumption in a particular direction, or when you may be just in a choppy, nothing happened, no momentum type condition. This is the impulse key that you understand. When it's solid green or solid red, it means conditions are favorable for a move in that direction. So it tells you that the energies are there, so you can hold the positions longer. And then it'll tell you when those conditions have disappeared. When you have it neutral, it's going to be yellow. This is neutral, and it's telling you that there is the highest probability would be if it resumed some momentum, if it resumed an impulse condition, it would be to the upside or the downside. This is when it's neutral, and this is what it looks like when it's off, because it doesn't turn on until 10 minutes after the opening, when all of the dust settles at the beginning of the day. This is a look at the live broadcast that you're getting right now. And this is just fantastic. As you can see here, as you look at our SIR live grid, and this is running live, this is our reversal scout in here. It gives you the direction of the market. It tells you the conditions of the market there on these 15-minute charts. You can also get a good sense for the strength and weakness. You can see in here the Russell has been very strong. Yellow zones are acceleration zones. We expect it to move through it when it gets into the acceleration zone. And then in here you've got the reversal scout swing, and the shorter one in here, the reversal scout scalp, so that you can decide on your, even if you're a scalper, what the conditions are in the market. And here is the impulse monitor on the left. We're not quite showing the Dow on the bottom because we don't have all three of those in here, but you can see the conditions right now that the impulse is on the QQQ. In other words, the conditions are such that the highest probability is for an upside impulse, and you can see it's actually a little bit stronger here than what's going on here in the S&P 500. The conditions right now on the S&P 500 and the Russell are telling us that they are neutral. However, were momentum to come back, would there be another condition for another impulse, the odds are that it would be to the upside. So this is telling you, keep your eye open for an upside resumption in there, and the QQQ just actually turned to the positive side that you can see here. That was just a few minutes ago, actually, from when we're doing this recording. This tells you that the conditions are now positive for an impulse to the upside. This change is live. Our algorithms are built in here. This is all live, and this is being broadcast. Now you can get the individual app for this also, and just have them separated on your screens if you wish to do that. Just absolutely fantastic when you look at that. That is the look at the new day trader service. Just $24.50 for the first month, and you'll get a great feel for this. We're going to do, this is the first week, so we're going to be recording a lot of lessons and doing a lot of teaching about how to use this. I think that you will love it if you're an intraday trader, intraday swing trader, or an intraday scalper. This is a great help for you. I believe this will raise your overall batting average, both in the number of winning trades you have, because it really helps you on direction, and the size of the winning trade versus the size of the losing trade, because it helps you stay in the bigger moves. So the new day trader service, sign up for just $24.50. Go to the top of the askSlim website and click on that sign up page. If you have any questions, write Matt at askSlim.com. Semiconductors, with market correlations that tell a bullish story. And that mostly is in line with the expected bottom that we had in the market in this timing, looking for the market to make a low at the end of October or the beginning of November. So we're right there right now, and we're going to look at these very key stocks, because if they are setting up in a way that is more bullish, which I'm going to show you, then of course that is a good thing for the market. Of course, with the S&P 500 surging almost 200 points just in a matter of days, it's not the time to chase these stocks. However, what we're going to look for is an opportunity to enter on the long side. Let's first look at the SMH. I'm going to do a little lesson here on cycle analysis. This is really important, especially since we're showing this week the beginning of our special on the cycle analysis workshop, which I want you to make sure that you do watch. So the first thing we're going to look at is, what is a cycle? Well, a cycle is a repeating process that goes from a starting point to, which is the point of origination, back to that point. In other words, there's a timing in here that ends up to be the same thing in this repeating pattern. So it's a repeating pattern that you see. Every single stock has got its own cycle lengths. In this case, we're looking at the average cycle length of 27 bars, or when we're looking at it on a weekly chart, it's 27 weeks. And you can see how well that comes out, looking at these cycles going back to the low that we had in 2020, and you can see how these lay out with the lows, these dotted lines right over there. In actuality, this one a little bit short, as you can see. They're not going to come out exactly on. They are an average. This one almost right on the 27 weeks, and the same thing for that low right over there. So because this timing comes out as it does, right on the time frame that we were looking for a low in the markets, and certainly in this group, you can see as I blow this up that the ETF has moved sharply up and into a resistance area. So when we do our work, we look at several things. We look at the cyclical periods, as we have right in here. These are always what we use as a cycle brackets. This, of course, is not the cycle. This is just simply the average length in the money flows, kind of the heartbeat of that market. So you can see in here the low came where it should have, and because this was a positively configured cycle, in other words, the low was way above where this low was, and what we call a very positive translation, because the peak was way on the right side of the cycle, that sets up what is another bullish cycle to follow. And generally you can use our reversal scout to see when that is turned up, and you can see that right there. Now you get this one up week right over here, right where it belongs. Our reversal scout has not turned up yet, so the momentum has not caught up, and it's telling us that Well, let's wait and see, and there even could be a pullback because we put in the resistances. This is the 38.2, the 50, the 61.8, and the 78.6. So all of our charts that we do our analysis on have this kind of analysis, and you can see going back where you had the positive configuration and the positive translation with the very late peaks, that sets up these positive cycles forming in there. When you had this negative cycle that peaked like right in the middle or maybe slightly on the left side and then made a lower low, it said that the next rally would fail. And that, by the way, is how you get these head and shoulders type tops that you see right in here at that form. And then the next cycle, of course, is negative and bottoms spot on time, as you can see. So then positive cycle, what does that tell you? It tells you that the probabilities are very high that the next cycle right in here will challenge that high at 161.17. Now, of course, we've been talking about the fact that the stock market is likely to have a better November and into December, and you can see that is already happening. So the timing on that is correct. And what that says to us is that were there to be a pullback in here, it is very unlikely that it would take out that low. And if anything, give an opportunity, because if you look at even, pretty negative patterns, they don't peak in the first week up. In the most negative pattern that we have in here, that was the third week that it peaked, and that is an extreme rarity. Much more likely that this will go up for some months, maybe 6, 8, 10 weeks, and then start to roll over. So we're looking for a favorable period in here, and we're going to have to see how it acts. Now you can see in here these two lines right there. That simply was giving us the range of time that this ideal bottom would come, and this happened to come almost perfectly on, maybe 1 week later, and then moving up. This is a bullish occurrence when we look at this. So now let's quickly look at the stocks that are pretty key in this group, and you will get a good feel for how they line up with the semiconductor ETF. So let's take it the one that everybody looks at first, which is NVIDIA, and we'll do the same thing except faster. And you can see in here, as we look at this chart, which hopefully will blow up, there you go, that we have a cycle that very much looked like it bottomed. Now, the low which occurred right over here was a super strong low, as you can see, and then it rallied and then came down right there into this time frame that we were looking for, low in NVIDIA, and then turning up right over here. So again, with this positive configuration, we really look for these highs to get tested. If it were to come down underneath this low of a 393, that would be a bad thing, and it would have us looking at this again and saying, well, something is not right. But right now, this looks like this is liable to have a very good rally coming up in here. Now, were this to rally up in here, stall somewhere over here, 470, 480, and then roll over and take out that low, well, that would be a really negative occurrence. That's not something we would expect. In fact, the probability of that happening with an early peak is probably less than 30%, maybe more like 15 to 20%. So right now we're going to look for, if it does pull back in here, that it is a buying opportunity. That's a look at NVIDIA. Let's take a look at Micron MU, and you can see in here, this is similar. But the low that came right over here doesn't really look like that cycle low. It looks more like it was here, but it could be either one. And now it is turning up. And again, because of these cycle shapes, the probability is high that it's going to test up here at the $75 level sometime in coming weeks. So this does look good. Were this to get down below this level, I'm just going to grab this right over here so you can see, below that level right over there at that's 60, where the middle of that cycle is. And I'm just going to look right over here where this level is right there at about 64. Those are the key levels. Under 64, this is not a good pattern at all. And then we would change our mind. But in the meantime, the highest probability is that it will find its way up to 75. Intel has been a dog, an absolute dog, as you can see. It is forming cycles in here that are somewhat positive. However, that the earnings did come out. Whoops, when did the earnings come out? They did come out already there. So it's gotten a rally right here in what looks like the second week, as you can see. But because this low almost took out this low, it says to us that taking out that high is going to be a challenge. It's going to be difficult for Intel and likely to stall in here somewhere and then turn down again. And maybe getting back up to that high right there, which is right around 40. And that really feels like an outlier and a best case for sure. So I don't love this one because of this shape. More likely it's going to come down. Now you can see in here that this is the SMH pattern right over there overlaid on it, and the bottoms were due right here, and it is coming up. So looking at the cycle correlations with the SMH is very important. Let's take a look at AMD right in here, and you can see that the green dashed right there is the SMH. It almost trades exactly with the SMH. Look at the bottom formed right over here in that rally, now coming into resistance. A positive cycle and a positive cycle, but this came down very close to that 78.6%. I'm going to guess it's not going to surpass the 78.6% here, but still, it's the first week up. If it pulls back, for traders, this is very likely going to be a buying opportunity and then moving up for some number of weeks. I'm going to make it a high probability that it trades up to 117 level. So therefore, if you can buy it somewhere down over here under 105, 104, it's probably a good purchase for a long side trade. Let's look at Broadcom, which is AVGO, another one of these semiconductor stocks. And this cyclical pattern in here doesn't really lay out perfectly with the rest of the group. You can see in here the green dash is the SMH, and you did have this pullback right in here that aligns with the SMH, but this stock has got a longer cycle pattern, as you can see. It's 34 bars versus the 27 bars that are in the SMH. And this right over here could be a risky period for it. So you can see that it's been range bound in here. And if I got back up into these areas of these high waves on the candlesticks, these rejections, I think it's a sell, and this looks like there's going to be a decline that comes down into January right there. And the last stock we'll look at is in the semiconductor equipment category, which is Applied Materials, AMAT. And you can see in here, well, this looks like a very good pattern. Again, you can see the positive cycle here. The positive cycle here makes the low in support, turns up on the first week right there in the cycle, and very likely if it pulls back, it's going to give a buying opportunity with a pretty good probability that it's going to move up towards that level at about 155 sometime in the next month or two. So this is a very good pattern. Again, if it got underneath that low at around 129, well, that would be bad, and it would have us looking at it again. So that's the importance of understanding the key levels, understanding the cycle shapes, understanding the momentum, which you could see in here is still negative, so it has work to do before it does turn up, and then understanding how to do the projections based on everything that we look at. Of course, this is cycle analysis. It's our version of it, which I think gives some of the clearest looks of market condition. And again, this is a positive pattern in Applied Materials. So that's 6 stocks. The only one that I would say is not lined up strongly for an upside move and is likely to fail if it tries is Broadcom. And the other 5 that we looked at very well lined up with the semiconductor ETF, the SMH, which does look bullish. So overall, what we see is a very strong looking semiconductor group in line with the stock market and likely to be stocks that do lead on the upside as the market has a better time of it in this next month or more. That's it for the semiconductor stocks. All right, stock market analysis and projections on the S&P 500. First, read this important information. It tells you about our approach to the markets and what that means to you as you use our information. Very important information. But before we get to the stock market, this is what so many people have been waiting for, and we get emails on this. When is your cycle analysis workshop special going to come? Well, this is it. And we're going to offer this special a little bit differently than we ever have before. You're going to learn my method of analysis, which has been taken on by the other experts in our askSlim team. And this is what I have developed over nearly 50 years in the market. It took me a couple of years to write this and over 6 months to produce, and we keep adding to it. There's 24 video modules, plus many tools for text videos connected to this. You're going to have weeks and weeks of viewing to do, and you're going to learn so much about cycle analysis and the markets. This is online lifetime access. You invest in this, there's no special platform required. You're just going to be able to watch the videos and learn. And you're never going to look at charts the same as you did before. This is going to improve your directional decisions and your projections in both time and price, as you see us doing here on the team in our big universe of stocks, ETFs, and futures that we look at, plus a bonus that we have never offered before. I read The Profit Magic of Stock Transaction Timing, the Bible written by JM Hurst almost 50 years ago. And the work has evolved from the work he has done. And you've seen the quality of the analysis we bring. Well, I have, over this last years, looked for these things to be available because this book has been out of print for decades. And I keep buying used books when I see them available. We're going to give the first 25 people that invest in the Cycle Analysis Workshop a copy of this book. Now, some of them they're all used, and they're, figure 30, 40, 50 years old. So they're not perfect looking books, but it's been hard to get them, and I've done what I could to collect them. So we're going to send you one of these books for subscribing to this workshop. Also, as a bonus that we have never done before, we are going to give a 30-minute trading session to everybody that does sign up for this workshop, and a member of the askSlim analytical team will be able to meet with you for 30 minutes and answer your questions and help you with looking at some of the analysis you've done, or maybe doing some teaching around part of cycle analysis. Both of these bonuses are worth $400, and we're giving $400 off. So the special is $400 off just $897 for this amazing workshop. Literally, you could pay $5,000 for something like this somewhere else, but we don't want to do that. We really want you to learn. $897, and the first 25 are going to get a copy of this book. Go to the top of askSlim.com and watch the video that's in the workshop section, or just sign up. On the workshop tab, you'll see the ability to watch a video that gives you some idea on what cycle analysis is about. That's free, or you could just sign up. $897. Questions, write to Matt at askSlim.com. Don't miss the opportunity to get one of these books. So hurry up. First 25 gets it. That's it. Cycle Analysis Workshop. Go there right now. Okay, here we go. Stock market analysis, S&P 500. We're going to do weekly and daily analysis, and you're going to see how the stock market has acted right in line with what our expectations were. And then we'll also look at some of our proprietary studies. We'll look at the Slim Ribbon, the Slim Ribbon PO, and the OBI, and you'll get a sense for what the information is that we're getting now in the stock market. Let's start right now looking at the S&P 500. So this is the SPX chart, and we're looking at a weekly on the left and a daily on the right. I'm going to blow up this weekly chart right here and look at this amazing, huge upside week that you see right over there. I mean, 6% up is a huge gain. And look where it is right now, right on that 50% retracement level, right in between this darker red and the lighter red. So this is the 38.2, the 50, the 61.8, and the 78.6. 78.6 is a big number up here, up around 4,500, if it would be able to get there. We thought that this rally would get up, but I didn't think the first week would get it there, up to the 4,350 area, but here we are right now. So our analysis showed that the period of August through October was a period of risk. And that is exactly what happened. We projected that it would move down to 4,200 to potentially 4,110, the low right over here around 4,100, and then a massive rebound right in here. On the bottom are the cycle brackets. Now, there are several key things to look at in here that I think are very important. First of all, the black cycle bracket, that's the one we want to look at first. And that is giving us a sense that there was that key low right in there. There's also this minor blue one right over there. And that is giving you a sense that the market was in a declining phase with both of these cycles right over here. So that was our period of risk right in there. Now, there's also this out of phase blue cycle right in here. And if you look where the low was here and the low was here, and this low right over here, that's important, especially since the trough in here bottoms out here in line with FEZ and FXI, the China market barely rallying, the European market getting a rally, but a lot of risk out over here when we look at that. So this is the FXI and the FEZ right there, and those tell you on those cycle brackets the timing for these troughs right in there. That could mean that while we're getting a big upside pop right in here, that there is still periods out over here that the stock market's going to have trouble. And that's why in the beginning of the show, I talked about the potential for chop in the markets. And that is what we see right now. So the big upside move and then more, I think, chop coming out over here with a potential for a pretty sizable pullback out over here, maybe in December and into early January. But right now, we want to look at how it acts in these resistance areas. You can see these upward projections right over here, which is to around 4412 up here to 4500 right there, are what are reasonable projections over coming months as we look out over here into the late winter and spring. So if we get some choppy action in here, there's certainly, I think, going to be buying opportunities looking at that. Now, let's switch over and look at the daily chart right over here. And you can see as it's got up here to that major 50%, here are your cycle patterns and right in here that you see. This is where we were looking for the alignment of the Russell, that's the green dash right over there, that was telling us this was a very key area, both in time and price, for the bottom to be made. And this upside launch that we had in here is not something that I saw coming, though I did see the bottom timing as we have right over here. Now, I want you to note that this little blue arrow is important because on the Slim Ribbon PO, and I'll show you another version of that, it's telling you that the momentum has now improved enough to be neutral in the stock market. In other words, the negative momentum that you saw here, and this is the Slim Ribbon telling you about that right there, has now neutralized. Now, if I go back to the weekly, you could see the reversal scout, which is right here on the weekly, has not turned up yet. And when you get under those conditions where you get upside moves that, it hasn't turned up yet, you could get into choppy action. You see that right over here where it had a big rally early in that cycle and then had quite a pullback right over there to support. You could get that to be happening in here. So let's go back to the daily for a second. And were it to peak somewhere in this area, then we would expect a pullback sometime in the next few weeks to maybe about 4250. This is 4230, somewhere in there before it then would be picking up again. So looks like potential for more upside in here, but not a lot. This peak right over here is very important because that really confirms the intermediate bottom, and that peak was right on that level right over there, which was about 43.93, and we're not all that far from it. We're just coming up through this 78.6% repair level. So I left that in there for you to see. That's very important, as that is telling us that the probabilities are high that a very important bottom has been made in the stock market. You see that period of risk that we've had labeled in there? The last 3 weeks of October, man, that was just absolutely beautiful, spot on. And now we have a much better condition in the stock market, as you see the weekly having turned up over here, the daily having turned up over here, and the market conditions beginning to improve. Let's talk about those market conditions. Sorry about that. This is the S&P 500 as we look at it on the daily chart, which shows the slim ribbon on an area chart. This really gives you a good look at what the conditions are for momentum, and we were negative and now turning neutral right there. Look at that option bias indicator on the bottom where this turned orange. When it does that, it tells you about an extreme and a bottom warning, and that nailed it. So it's hard to see, but this is now turned yellow. So that is a condition of that's neutral again after being extremely oversold and warning us that the stock market was going to make a bottom at the timing that we expected, which is what we got. So very strong market when we look at that, and conditions are such that pullbacks are very likely to be met with buying coming in, and we expect those to happen because the markets just don't run away as we see right now without having some back and fill. But again, a bull market that we're seeing now has been restored and likely to be in a bullish condition for many weeks ahead, even though we expect that there will be a lot of chop in the market. Next week is Market Week Live. Friday, November 10th, our whole team will be with you. That's at noon Eastern Time. Our premium members, if you're a level 1 to 4 member, will be sent a Zoom link to participate. You want to be in there and be able to ask questions, then sign up for at least level 1. Free members, non-members, you can watch it on YouTube at askSlim Team. We'll be broadcasting live on there. So you'll see our whole analytical team. If you have any questions on that, write to team@askSlim.com. That's it for this show. Please do get acquainted, and you can sign up for our free information every day. That's our Stock Index Report Lite. On YouTube, subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up. Watch our member videos in the playlists and past shows. And on X, follow us at askSlim. Questions you have, write to Matt@askSlim.com, and he will be able to help you. That is it for this show today. I want you to be so incredibly careful because it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city.